Today, I would like to talk about a term that comes from market profile. What I'm talking about is the spike and the spike base, which allows me to find those levels I could trade against into the close in an environment that is very, very volatile. But with that volatility, as a scalper or a day trader, you can make a lot of money. Go into the chart, you can see that I have the 10-minute chart, and there are these orange boxes. And these boxes are basically telling you where the spike base is. And so what is the spike base? Well, to understand what the spike base is, we have to talk about the spike. And the spike was developed by James Dalton, and he's often obviously regarded as the godfather of market profile. And the spike is nothing else than emotional buy-in into the close, right? It reflects a moment of decision making amongst traders. And with this emotion comes this rapid move. And we don't know if that rapid move is based on actual buying or selling, but all we know is that we have price moving very, very quickly in one direction or another, and this is bi-directional. Trade puts and calls in it. Now, as far as what the spike base is, the spike base is the area before we spike up or down, and it often is very, very clear on the chart. And so if you zoom in here, you can see that this orange box over here shows multiple 10-minute candles developing this zone, right? The zone here lines up around the 68.45 and 40 area. And every time price attempts to push lower, they fail, right? Sellers fail to push price lower and it bounced back up. So what we have here is a developed range with a spike base and a spike into the close. So this is a very good example of trade I most likely maybe have taken or would have taken, trading against the 68.40 or the spike based low. And so what does trading against something mean? Well, all that means is that you're trading against a level that, if broken, will allow you to understand that you were wrong in your thesis, right? So if I'm trading against the 68.40, let's say we're trading the SPX 68.45 calls with 20 minutes into the close, what I'm telling myself is this: I'm sizing down. If we hit 68.39, so we break to 68.40 and it starts accelerating to the downside, I am wrong, I will cut my position. Obviously, you can always trade with no stop at all, and all you're doing there is adjusting your position size enough where you're okay with losing it. And this, as always, is something very, very good to do and trade with profit if you have profit. I would not encourage anybody to trade SPX 0 DTE without profits. So that's one good example of it. Another good example is an example to the downside, and this is just a day before or 2 days before. You can see that what we had here was simply a move higher, and we have multiple wicks up top. So you see the shadows on the candles attempting to break the 68.40. So remember, the first example was 68.40 was the spike base. This is a day or 2 days before. It acted as resistance, right? In 2 days, it acted as support, and we saw the spike higher. So that is no surprise to me. But with this spike base, you can see that it presented us with a really nice opportunity to trade it to the downside. And so this is a good instance where I would have traded the downside with a stop above the spike base. And so it gives you a really nice risk reward, right? If you have about 2-3 points stop with a possible 15-20 points as your target, that is very, very good. But what I like the most of this is it helps you stay patient. Knowing that something will happen or can happen allows you to sit on hands and wait for it to develop. Once all the signs are lining up in a way that gives you confidence to trade it, you can trade it. Another thing that I like about this strategy or this idea of trading is that you can know very quickly if you're right or wrong. And if you're right, you know that you can hold your positions a little longer than perhaps many will trading SPX 0 DTE. This is another example, right? We saw a big move lower, a little bit of a dead cat bounce that failed to push higher. We developed a smaller spike base over here that in the end sold off into that 68.10 area. And so in this example, we moved them from 68.25 into 68.10 in a very short amount of time, which for me is super, super powerful and exciting. This is the last example, and we're gonna try to keep this video fairly short. It's nothing complicated. It's just something that people, I think, don't know or oversee. This is an example of which we traded higher and then just consolidated most of the day. In this example, this is the last 45 minutes, 50 minutes of the day. We had a couple of instances where price actually started pushing higher, near high a day, and then failed, right? We did that a couple times, and then we started developing more downside volume, and price action started to look a little weaker. I remember VIX started to push higher. You have internals weakening. So all those things are variables that you have to take into account when you're trading SPX, 0DTE, and this strategy in particular. And so this is a spike base that is developed, but it also lines up with the resistance from the day. And this gave us quite a big move, right? We saw a move from 68.30 down to about 68.10 once again. And so this would have paid quite significantly if you had taken, let's say, the 68.20s or 68.25. So fairly close to in the money, which is a little cheaper end of day. Take advantage of it and go deep in the money with just a few minutes to go. So just to recap, the market profile talks about the spike and the spike base, which is just emotional buy-in into the close. This is something that you can carry forward into other days or the next day, which we haven't really talked about, but it's something that you can research on your own. Now, what I'm interested in here and what we've talked about in this video is how can we anticipate a possible spike into the close, see the clues, line ourselves up for that trade, and then taking advantage of it. Not only that, but we also know very quickly if we're right or wrong. And that allows us to cut our position very, very quickly and lose some money, but not too much, right? Which is, I think, something very powerful when you're trading SPX 0DTE. And so if this video was helpful to you, I would appreciate a like. If you want to repost it, it would help others see this strategy. And if you want more of this kind of video, let me know, and I will take that into consideration for the days and weeks ahead. With that, have a great rest of your day, and I'll see everybody in the next video. Bye-bye.